This congregation is very, very powerful. It gives positive vibes. I think it's a great place. Thanks to you all for inviting me. And obviously, let's create something really big for our investors and for ourselves as well. So a little bit of journey what we as Samco, maybe for some of you, majority of you, we will be new, but we are an old guy. We are 25 years old. We had traditional stock broking in the name of Samruddhi. In 2014, we rebranded, entered into discount broking. We were the second to enter into the discount broking industry. Zerodha was number one. Our thought process was, we have to be early innovators. We have to spot the trend early in order to make the mark. We were the first broking house to get celebrity as brand ambassador. No other broker did. We were the first broking house to bring trading leagues in India, which no other guys did. So that was our thought process. And from a 15-20 member team back in 2014, today we are 550 member team. Our all India turnover rank was below 240 in 2014. Today we are in top 40. So this is the broking piece of business. Let's talk about AMC. So as an AMC, when we started 2.5-3 years ago, we had 13,000 partners registered with us on day one. And today we have got 32,000 partners as our important part of our business, our partners. So let's come to our mission, what we are for. So to help investors create highest possible risk-adjusted return, highest possible risk-adjusted return over the long term by building differentiated, active, non-index hugging strategies that investors cannot do it by themselves. So this is the mission that we started with our AMC business. And in doing so, UTI US 64, and today it is 60 years, no other asset manager created a new category in the mutual fund. We were the first to build momentum category. And this is what our thought process is, that we will have to find space. We will have to add value to our investors. And globally, momentum was a great wealth creating strategy for investors. MSCI index since 30 years, world over, momentum has created money. And we thought, let us enter, let us bring this strategy to India. And now SEBI MFI has created this as a category. And so this is what our thought process is, that when you, as a service industry, when you are a late entrant, you can study all other players and then find a gap. How do you add value? So this is how our thought process is, that we want to add value and bring such products and strategies that ultimately add value to our investors. So these are just quickly the difference between active and the passive side, etc. Quick rebalance, etc. So I will not spend time. This is well enough now, more than enough documented as to what are the difference between. So my mandate of the board is that don't bring any fund or strategies which can't generate 5% alpha over and above the benchmark. So this is what all our funds get internally green signal through our board of directors. So now let me quickly run through what the current trends are, what industry is looking at, and how I think wealth can be created growing forward. So if you look at which is the fastest growing category in last 3 years in the mutual fund industry, that is not small cap. That is the large cap. 84% growth is what can be seen in the large cap. Small caps have grown by 49%. but it is the fastest growing category is the multi-cap. So we as manufacturers, you as partners, if investors are liking multi-cap as a category, we all have to get into this category because this category has one unique feature which no other category has. And what that feature is? Discipline. This is the only category wherein the fund manager has, by mandate of law, needs to keep at least 25% in large, 25 mid, 25 small. No other category has this discipline. If it is a large fund, large cap, it's 100% large cap. If investors are loving small cap, it's 100% small cap. But the problem is what? In small cap, there is no hedging mechanism. Fund manager can't sell, and it is the investor who has to take the call. But multi-cap, beauty of multi-cap is, it is the asset managers who take that call. And as a matter of discipline, today the popularity of multi-cap is what? It is a 9th rank. Multi-caps are 9th rank as far as weight is concerned. Our estimate, and this part is very important, dear friends, our estimate is this category is going to even get bigger and bigger and even overtake flexi caps in 3, 5, 10 years down the line. So from a 10-year compounding opportunity for investors, multi-cap is the fund for investors to get into this. See, today in the flexi cap, if you dissect the market cap, 75% of the flexi cap funds are sitting in large caps. 75% of the funds are sitting in large caps. And that is why we think, because of this very discipline, I think this is a great category, and we all have to get into this category and ask our investors to remain invested. So this being so now let's quickly understand how existing 24 funds have created the portfolio. Almost everyone has 40, 45, 50% large cap. The second line, mid cap, if you see the yellow, 26, 27% is the mid cap, and last 28% is small cap. And the last line is cash, 5.5%. So industry has created almost 45, 50% large caps because the underlying benchmark is also 50% large cap, 25% mid cap, and 25% small cap. So industry has also created a portfolio mimicking the cap wise, and this is, but today's investors are smart. They want more, they want alpha, and they know that churn that mutual fund can do, they are tax efficient. If they do, there are tax implications, and they are willing to take risk provided they want they get higher risk adjusted return. So in this aspect, so now if I may quickly run through the 30-second communication, and then I can quickly revert what we are trying to do as far as the multi-cap is concerned. Audio.
This medium and this small. And it's not over yet. Introducing the most special, smaller, and these make the Samco Multi-Cap Fund with 4-in-1 strategy, where these 4 together represent you in the market's bullfight. Invest today. Mutual fund investments are subject to market risks. Read all scheme-related documents.
So this, I think, is the unique feature of Samco Multi-Cap Fund. It will have small caps beyond Nifty 500, in simple terms, micro caps. So industry has made a portfolio 3-in-1. Samco's multi-cap is the only unique fund which will also have small caps beyond Nifty 500 up to 25%. And why small micro caps? So to be precise, micro cap, mid cap, small cap, and large cap. This 25, 25, 25 is Samco's unique proposition on the table. And again, we were the guys who brought in this 4-in-1 strategy as part of, again, innovation for our investors and alpha for our investors. So during normal bull market, we will have across market cap, 25% allocation across market caps. Why micro cap? Because of the return profile. 1 lakh rupee invested in micro cap index, Nifty 250 micro cap index becomes 24 lakhs, and 1 lakh rupee invested in large cap Nifty 100 index becomes 12 lakhs. So obviously return profile is superior. And what we have done, instead of 50% large cap, we have taken this 25% and get into the micro caps. So ultimately this is how alpha will get generated for our investors. So the next question will come, if micro caps are there, the fundamentals may be weak, fundamentals are not strong. That is also a myth. We have aggregated fundamentals of all 250 stocks in the micro cap space and 250 stocks in the small cap space. So the micro caps are growing at 30%. Sales growth of micro cap is 30%. Small cap, the growth is 27%. The 3-year profit growth, 59% for micro caps and 54% for small caps. Micro caps are growing faster than the small caps. And lastly, efficiency, return on capital employed, 24% return on capital of micro caps, 22% for small caps. They are also more efficient. So the return profiles are also superior, fundamentals are also superior, and this is what we have added for our investors, 25% small caps beyond Nifty 500 or micro caps. So this is the unique strategy of Semco multi-cap fund. So far, so good. Now comes the real joy, understanding how we will identify stocks. And here is the crux, because ultimately returns will get created because of stock. So we will use our proprietary models using trend, momentum, quality. We will have a balanced asset allocation size. And third and the most important point, active rebalancing during downtrend. So how we will do, let's quickly understand. So basically for any stock pass has a 4th stage. Our algorithm will try and identify and create a bucket of all those stocks which are in acceleration phase and get rid of stocks which are in declining phase. So this will be done on a continuous basis and create a portfolio of all accelerating stock or uptrending stocks that are there in the market. This is what our models will do. So now let's understand with the help of a live example. So this is typically manufacturing process of in the automobile industry. Earlier, there was a manual process of assembling car, and today it is all about technology, automations are happening. So don't look at, so this is one of the stocks that our system was able to identify. We were the first in the industry to buy this company called Tips Industries. Today it's a 2x, 3x beggar. No other asset manager had Tips Industries. We were the first. And how we were able to identify? The manufacturing process that you can see. We did not do it manually. We used with our systems and processes. So that conversation that I am now going to do for next 5 minutes is the most important conversation, because this is, you will also come to know who are the asset managers and how wealth will get created 5-10 years down the line. So there are these 2 companies that you all have to take this, you take decision and invest. Every one of you have 100 crores. And with the grace of God, tomorrow everyone will have. So you have got 100 crores, and I am going to give you a profile of 2 companies, add your emotion and take a judgment call. So there is this company gets 300 rupees of gross contract value for making televisions, large, mid, small. Any television you make on a blended basis, the margins are 300 rupees. Factory he has to manage, labor he has to manage, depreciation he has to manage, everything he has to manage. LG, Samsung is the brand. Ultimately he is making television for those brands. Company, so as an investor, company has no pricing power, company has no brand, company has no moat. This is what we have heard and studied as an investor. In the books of theories, Warren Buffett has also said that company needs to have a brand, company needs to have pricing power, company needs to have moat, high margin. Nothing of this sort. The average selling price of television is 44,000 and you are getting 300 rupees gross margin. You have to manage all expenses. So this is one company, one as a profile for you to invest your 100 crores. Second profile, Your companies like HDFC Bank, 3.5% net interest margin, brand, huge branch, power, moat, etc. And 3-5 years, 10 years down the line, you know that my money will not get wasted. My money is safer in HDFC Bank. I will make money, but इस company का कोई भरोसा नहीं है. This company might vanish. Margins are thick. There is no pricing power. Company does not have brand. Is dependent on others. And why should I invest in this company, right? So if you have 100 crores, dear friend, a show of hand, how many of you will invest in HDFC Bank? Arey bhai, take my word, if you have genuinely 100 crores, no, every one of you will write a check for HDFC Bank. None of you will write a check for 300 rupee company, which is just a margin. So this company we invested, and I will name this company in a while. This company we invested as a part of our portfolio. This company was identified by our systems. No amount of fund manager will have ever identified this company. So that's a short context that I'm setting with the previous slide. You know, the latest manufacturing process that we have seen compared to the past manual. So when I met this company, so I am also of the traditional mindset. You don't have brand, you don't have pricing power, you don't have, your margins are thin. So I met this management. And the conversation that I had, I think is superb. It will open up the eyes. I also said the same thing. Sir, why should I invest my investors' money? You have no pricing power, brand, etc. Sir, we also make ACs for Voltas. They pay us 1,800 rupees as contractors. But if Voltas makes by themselves, their cost is 2,300 rupees. I will charge 1,800, I will charge 1,900, I will charge 2,000. I have got pricing power. He will never be able to make it himself because 6 months his assembly line is empty. I will make because he will have to incur the cost. Wow, great. Second, sir, the definition of brand, moat, आप कौन सी दुनिया में रहते हो? Sorry, I'm using Hindi. ये सब पुराने ख्याल आते हैं. Today, because all other competitors are outsourcing and their cost, Voltas will not be able to compete if he makes it themselves. And therefore, the moat that I have is, I will always be able to he will always come to me. And therefore, I have a pricing power and a bargaining power. And competitive edge, so China +1. Today, I have so much of work out here because America and China, they are at struggle. There is so much of orders that I have. So the definitions of moat have changed. आप कौन सी दुनिया में रहते हो? So this stock, what I am talking, has become 3x in 1 year. 5x. In 5 years, it has become 10x. No other fund house has bought this stock except your largest small cap fund. They invested just 6 months prior from today. This stock is PG Electroplast. The point then I'm driving, dear friends, is today the investing world has changed. If we think from a traditional mindset, if we think from a manual process that we will be able to identify stocks, answer is no. Today there is so much of information dissemination. Market is supreme. It is the market that is going to guide. So our systems and processes, we have created this system so that we can identify these stocks and the highest risk-adjusted return. Our process has only one thing. How can I generate highest risk-adjusted possible return? I will invest in such companies because this is what is running in the market. This is what will deliver return. Investors are relative investors. In our mutual fund industry, they are not absolute investors. For absolute investor, HDFC Bank will be a great bank, but not for mutual fund investors. Mutual fund investors are relative and they want stocks which are running. They want stocks ultimately that can deliver return, and it is a systems and process that can identify this type of stocks on a day in and day out basis. Because of lack of time, I will not be able to go to other stocks and what Tips is doing, or for that matter, what all other stocks are doing. But I think as part of investing, see today wars are being fought by drones. Do humans go? So similarly, today my fund manager from 9:15 to 3:30 in the evening, they work like automation. If there are signals, buy PG Electroplast, they will buy. Sell PG Electroplast, they will sell. Buy Tips Industries, they will buy. So this is how they work with, they can only work with precision, no emotion, no biases, and no errors and omission. It is a system that wins this battle. And this is what today, there is unique proposition as far as the fund management industry is concerned, that times have changed and we are more process-driven, model-driven AMCs than compared to the other mindset. So just I want to quickly return, who is the guy who has generated 66% CAGR since so-and-so? He is Mr. Jim Simmons. And we get inspirations from him. The global best practices today in the asset management industry is no fund manager intervention, all process-driven, model-driven investing. This is what we are doing. And this is the kind of return he has generated. Today he says in his interviews, this is Jim Simmons, that we have no manual interventions. It is the models that make money for us. So just to quickly go through, coming to our, the current scheme that we have on the offer, how we will do risk management. Basically risk management, 25, 25, 25 is the portfolio. But when markets are down, when markets are in bear market, we will do active hedging. Our 25% large cap we will sell in futures. Mid cap, almost 10% have F&O, so we will sell mid caps, and therefore 25 plus 10, 35. Micro caps is our leeway. We will sell all micro caps, get into debt, or create an arbitrage fund. So almost 25 large, 10 mid, to 35, and 25 micro. 60% of the portfolio will be hedged during downtrend. And this, dear friends, the seat belt mechanism that we have is also unique in the industry. We manage, because see, accidents are going to happen. And when accidents happen, investor will fall out of the market. Either he will go, either he will panic, he will press redemption, etc. If he has a seat belt, no. If market falls by 50%, his fund falls by 25%, he is fine. But if market falls by 50 and his fund also falls by 50, he panics. And because of this 60% hedging that we will do, the seat belt mechanism that we have, I think this is a unique feature in this multi-cap space. I will not go through this quickly. This is how we do rebalancing. Just in a week of dynamic rebalancing that we did in one of our hybrid fund, we were fully invested when the market was at top. When the market came down in the week when Japanese central bank increased the interest rate, our equity curve became 68%. And in 2-3 days when market did not fall further, that was a layman moment for the world. But when market did not fall, we again went back to 82 and next week it was 100% in that week. Nifty was down by 1.5%. Our fund for that week was down by 0.98%. The fall was lower than the... Idea is what? For every fire to happen, there is a spark. If there is a spark, you get out of the market. But if the spark does not pan out, you again get into the market. But someday, that spark will be a big fire and we will be able to protect our investors through drawdown. So there is no other way on this planet in asset management industry to have drawdown protection. This is the way, managing dynamically on a real-time basis, drawdown protection for our investors. So coming to invested in the multi-cap model, generates 959 since 2005, and on the underlying benchmark, it is 209. This is the power of model investing. Drawdowns, because we have seat belt, the drawdown was lower. 2009 global financial crisis, market was down by 65%, model was down by 35%. Across all time frame, because of seat belt, the drawdown will be lower. 3-year return profile is also superior, and this slide is most important as far as the multi-cap fund is concerned. Since 2005, the model, the back-tested result shows 26% compared to the underlying 17%. This very code now we will run in the live market, and today you can at least have that from a 10-year perspective. There is some amount of predictability that today if my investors invest, at least we can aim for this. So as far as governing board is concerned, we have on the trustee side, we have Sri G.N. Bajpai ji, former LIC SEBI chairman. Every 2 months he comes and he grills us. So this is what I think, to quickly come to our trustee board, Prabhat Kumar ji, Shailesh Gedia, he was the former cabinet secretary and first governor of Jharkhand. Shailesh Gedia, Sanjeev Kumar ji, they have a regulatory background. On the AMC side, we have Ashok Kakkar ji, former executive chairman. He was the first ED on the mutual fund. Ishwar Naik, I myself, Umesh Kumar Mehta, and my promoter Jimit Modi, we sit on the AMC board. So my time is up. Quickly, I think I have a great fund manager team. They are young, they are smart, they are mathematicians. They can not only read balance sheet, they can also read codes. I think this is what new age AMC we are. We are in the beginning stage. We are a micro cap today, but we will become small, mid, large, and mega cap. The invitation for you is to join us early. This is what we do, what we will do for our investors in their wealth creating journey. Thank you. Thanks a lot for patient listening.
Thank you, Umesh Kumar ji, and definitely AIFA, Kerala, and all the MFDs in the country will wish and pray that Samco Mutual Fund grows from micro cap into a giant cap very soon. That was a wonderful, exhilarating, power-packed presentation full of energy. No wonder Umesh Kumar ji is the CIO of Samco Mutual Fund. Now, I deem it my pleasure to invite Mr. Anantaraman, Zonal Head of Samco Mutual Fund, heading the business operations and sales in the south of India. Anantaraman ji, kindly join Umesh ji on stage. First, we will have the lucky draw sponsored by Samco Mutual Fund. We'll take out the first draw. The condition is that the prize winner should be available in this hall. No proxies allowed. Mr. Praveen, 260088. Praveen, yeah, he's there. Please come running. The gift is an Amazon gift voucher of 2,500 rupees, won by Mr. Praveen. Anantaraman, kindly draw the next gift, please. Mr. Abraham Verghese, 160672. Amazon gift voucher worth 2,500 rupees, won by Mr. Abraham Verghese. Now it's time for a few awards. We would request Umesh Kumar Mehta ji and also Anantaraman ji to give away the awards. This award is aptly titled as the Ignite Warrior Award. Can we call on stage Mr. Philip Chirian from Ernakulam chapter to come forward for the Ignite Warrior Award? Yeah, can we call Mr. George Jacob on stage, please? And Mr. Sajid. Mr. Philip Chirian, the past president of AIFA India, past president of Ernakulam chapter, a very, very active, young and energetic member, winning the Ignite Warrior Award. Stand there. Calling Mr. Ramakrishnan Mangat from Palakkad. Calling Mr. Shashi Kumar from Trichur. Shashi Kumar, the Ignite Warrior. Calling Mr. Prajit from Kozhikode chapter. Mr. Prajit from Kozhikode. Mr. Anil Kumar VK from Kottayam. Mr. Sedhu Madhavan from Calicut again. Mr. Sedhu Madhavan, please come running, sir. You are being awarded the Ignite Warrior Award. Calling Mr. Prashant Krishnan from Trivandrum. Mr. Prashant Krishnan. Mr. Richie Palathingal Varghese. Mr. Richie Palathingal Varghese from Thrissur. I think Ramakrishnan Mangat, you can take it on behalf of Richie from Thrissur. Now calling Mr. Ramanathan Menon from Ernakulam. Mr. Ramanathan Menon. Can we call Sri Lakshmi Madhu from Kottayam to kindly come forward and give away the token of appreciation to Umesh Kumar ji.